And to me, when I look at that, I see this scenario that is not very bullish for stocks. So I actually am a believer that the stock market in 2021 topped out probably for 10 to 15 years. I know that's a shocking statement to think about, but it's not unprecedented. If you look at the dot-com era, the NASDAQ, it took 15 years for the NASDAQ to retake out those highs.
All right, guys, hello and welcome. We have our special guest here, trader Gareth Soloway, who delighted to have a chat with him. And we spoke last year, and we're having him in this session. We want to talk about the stock markets. And I want to talk about with Gareth, what's his expectation? What are his thoughts on the major stock markets? Okay, join us, guys. All right, guys, welcome back. Okay, so Gareth, let's just dig into your charts and let's talk about it.
All right.
Okay, thanks very much.
We can start right with the S&P 500 here. And so for me, at least, I'm in this position of looking at the macroeconomic data, the Fed rate hikes, the inflation numbers. And to me, when I look at that, I see this scenario that is not very bullish for stocks. So I actually am a believer that the stock market in 2021 topped out probably for 10 to 15 years. I know that's a shocking statement to think about, but it's not unprecedented. If you look at the dot-com era, the NASDAQ, it took 15 years for the NASDAQ to retake out those highs that were made in 2000. So the idea here is this, is that the Federal Reserve is likely going to be very hesitant to lower rates when we enter in a recession, because they remember what happened to Volcker when he did this back in the 80s and inflation roared back. So again, if inflation's still stuck around 3%, to me, they're not budging on rates. They're going to keep rates stationary. The market, the economy likely will slip into recession, and it'll be potentially a long drawn out recession because it doesn't have the Fed coming to the rescue like it has in the past. And if that's the case, then you're going to see earnings per share for a lot of companies start coming in more and more over the coming years. And to me, that means the S&P is going to go lower. So if we look at the S&P here, number one, this trend line, we just hit it right here, and you can see the results, the downward move right here. But I think we're actually on pace probably by the end of the first quarter to test this 3,400 level. And I think by end of year, we could test 3,000 on the S&P, which is this long-term trend line that goes back to 2009, an amazing trend line. But that's my guess.
Interesting, very interesting. I have to tell you that a few months back, when the kiss of death occurred, just to show everyone what I meant by the kiss of death, if we just zoom in on that chart a little bit, when that big low occurred in October and took out the prior low, that initiated something, a chart and a signal that I look for called the kiss of death. We won't go into it right now, but I've mentioned in previous videos, and that got me bearish. And what happened was, I said back in early October, that we could see some kind of a Halloween effect bounce. I'm sure you know yourself about the Halloween effect. Between October to December, usually markets are bullish, and we can see on the chart how the market rallied from the lows of October to December. So that was correct. But I got to be honest with you, Gareth, personally, because of a number of other things I'm seeing also, which is not related to the chart, to this chart here, I'm cautiously remaining bullish on the market, which I know is controversial. A lot of people don't like me saying that, but I'm going to give the market the benefit of the doubt. So I'm going to remain cautiously bullish on the market. But put it this way, if the stock market were to break that December low, fine, I'll join you, Gareth, and I'll become bearish again. But as long as we're above that December low, I'm just cautiously bullish on the market for now.
Nice.
But again, I could be wrong. And can I ask you, is your expectation for the market to move lower sooner rather than later? Is that are you saying we could see something in the coming weeks?
Yeah, for me,
potentially move lower.
My guess is we're going to watch earnings season here, or Netflix reports after the bell, and then we have all the tech stocks coming out in the next couple of weeks. So my guess is everyone's bracing for some bad earnings. I think it may be slightly a positive surprise on earnings, and I think that actually could keep the market semi-buoyant at this point. So we also have the Federal Reserve in early February that's also going to be coming out with, I think on February 1st, their rate decision. And so I think in the near term, I think markets will more chop around. It also wouldn't shock me if we get a positive earnings surprise, if the markets do uptick just a little bit. But I think again, by the end of the first quarter, so by March 31st or so, I do think that we're probably testing those lows from October and maybe even touching that previous high from pre-COVID.
Right. Do you have I mean, I don't know if you know this, but Robert Prechter, the analyst Robert Prechter, who's an Elliott wave theorist. I mean, he's very much in line with you. He's also long-term bearish on the market, but he's very bearish. I mean, he's expecting the market to eventually move below the lows of 2020. Would you agree with that?
So, right, at least in this year, I don't expect that. I think maybe if we really get in this period where, you know, the recession gets worse and worse and the Fed is really tied, handcuffed in their ability to stimulate, that could be a longer term aspect. But at least for now, in this year, I would be shocked if we went more than just a pierce of 3,000 on the S&P.
So you're looking for the highs, those highs you mentioned, the orange line to be tested. Am I right?
Yeah, this would be the first target, right? This is that pre-COVID high before the dip. And then my second target by year end, this would be my second target down here.
Okay, thanks very much. Gareth, thank you very much indeed for this opportunity to talk with you. Tell us more about how people can join your services on inthemoneystocks.com and what they can get from it and what they can learn. And Absolutely. I do recommend, by the way, guys, I do highly suggest, if you haven't done it already, go to the link. I'll put the link for you guys in the screen, inthemoneystocks.com, and do check it out. Do check it out, Gareth's services.
Nice, yeah. And so first off, thank you for having me. It's an honor to talk to a fellow trader and a technician of the charts. As again, I think it's amazing stuff to read into charts and help people in general make money in any type of market, both bullish or bearish. So if people want to find more information, inthemoneystocks.com is where I'm at for stocks. Verifiedinvestingcrypto.com is for cryptocurrency. And both places I run a service where I put out trade signals. So if I see a buy or a sell or a short, I'm putting those alerts out to members, and I do a daily video with lots of technicals, lots of cycle work, all that kind of fun stuff for members to kind of tune in every evening and get their fill of.
Great, thank you so much.
Thank you. I mean, honestly, it's been a true honor. Thank you so much for having me.
Hey guys, I hope you liked this video. Thanks for watching. Just to let you know, you can watch the rest of my interview with Gareth Soloway, where we talked about very important matters. For example, how he goes about analyzing the charts. We talked about some of Gareth's favorite trading strategies. Also, how Gareth Soloway goes about managing risk, something extremely important you should know about. So you can watch the rest of this interview with a lot of educational information in the members area. And by the way, these videos are not on YouTube. So as a member, you can log in and access the rest of my video interviews with great traders and analysts, for example, Gareth Soloway, but also writers of great books on trading. For example, the classic book, Market Wizards. I interviewed Jack Schwager some time ago, and he shared with us a lot of fantastic and valuable information. You can watch my interview with top trader Linda Rashke, who, by the way, wrote the book Trading Sardines. She's a brilliant analyst. She's also one of the market wizards in the book Market Wizards, by the way. Then there's the famous options trader Guy Cohen, who wrote the brilliant book Options Made Easy, and also this book I love here, which is Volatile Markets Made Easy. Plus also my extended interview with the economist Lynn Alden, who I believe is a very intelligent analyst, and also my interview with trader and the expert on the Dow theory, that is Manuel Bly, and he shared with us a great strategy for analyzing charts. Again, remember, these educational video interviews are not on YouTube. So as a member, you can access all these video interviews and learn a lot. To join and become a member is very simple. All you have to do is go to this link you see here. That is leadingtrader.com/join 2023. And by the way, the link is in the description as well. And when you join on the link, you also get 3 months extra free for a total of 6 months. All right, guys, thank you very much indeed. I look forward to seeing the next video update. Bye for now.